The latest figures released by the National Bureau of Statistics showing a month-on-month decline of 1.6 percentage points, signaling easing prices pressures after months of elevated inflation. On a month-on-month basis, headline inflation stood at 1.22% in November, higher than the 0.93% recorded in October, indicating that prices are still rising, though at a slower pace. Data from the Bureau also shows that a notable slowdown in urban inflation, which dropped to 13.61% in November, compared to 37.1% in the same period last year. Rural inflation also eased, falling to 15.15% year-on-year, down from over 32% recorded in November 2024. Food inflation stood at 11.08% year-on-year, a sharp decline from nearly 40% a year earlier, largely attributed to changes in the base year. However, the NBS notes the price of several food items, including tomatoes, cassava, eggs, crayfish, pepper, and onions, continued to rise during the month. Core inflation, which excludes volatile food and energy prices, remained elevated at 18.04% year-on-year. My guest is Dr. Ayodeji Ebo. He is the Managing Director, Chief Business Officer, Optimus by AfriInvest. Dr. Ebo, good afternoon, and it's really good to see you. Compliments of the season.
Good afternoon, sir, and compliments of the season. It's great to be here.
Thank you so very much. My first question to you would be, government's projected 15% to close the year. Yes, but as we see it, it's standing at about 14.05%, what we have, 14.45%. Let me ask you, how did this come to you? What were you expecting? Did you have projections before now?
Okay, so I think that the projection of 15% and having the November inflation figure at 14.5%, I would say it's a positive one. Form about 53% of the total inflation rate, and based on that, its impact has reduced to about 43%. So, and we are seeing a major drop in food inflation, which is currently about 11% on a year-on-year basis. So I would say it's more of a structural impact. If you look at on a month-on-month basis, which is also important, we see that month-on-month as short-term inflation. It has continued to, for the third consecutive month, has continued to increase at 2.13%. So, which is showing that there's still that short-term pressure. But on a month-on-month, because of the, on a year-on-year rather, because of the base effect, then we would see that the impact of that base effect is having much variation. So I would say maybe government had already also done the maths based on the post-rebased, maybe based on projection from the MBS, and they've done their maths because it's I would say it's a positive coincidence that we're able to achieve below the target inflation rate by the federal government.
The issue of food prices is something that we all know that really concerns many Nigerians, and that worry of what happens to the price of meat, fish, yam, potatoes, and all of that. Nigerians are really, really interested in that. If you look at it critically, some would tell you that they are yet to see that level of, should I say, decline that will really impact them, and they will feel it in their pockets. What do you make of the price of food at this time, and what more efforts can be made to, support this decline that is expected?
Okay, so I would say that, yes, they have a very valid concern, but if we look at it objectively on a year-on-year basis. Even if you look at the basket of tomato to last year, it has dropped by close to about 30-40%. The price of bag of rice this time last year was over 100,000. It's significantly maybe an average of maybe 70,000 now. So that's 30% drop. But you know what the National Bureau for Statistics will look at, NBS will look at, is the baskets, different yam stuff. But on the average, if you compare a year-on-year basis, so it might have increased month on month. You know, there was a time that there was a sharp drop and later on began to pick up. So when you compare this time last year, that's in November, the data we're reviewing now is November data. Last year, November, and this year, November, prices of most of the major items objectively has reduced. And that is why we are seeing that low impact on that low inflation rate because of that effect. Then the structural changes that have also been made to inflation rate, that is also having impact on it. And coming to your second question on how to reduce it. So why would still say it remain elevated? We are paying for a lot of inefficiencies. So when you see moving things across, even in this era of heightened insecurity, the cost of moving items have also increased. We would have to pay for that. There are also several I'll say unofficial toll gates that you have to also pay. That is there. Then farming, I don't think we are actually optimizing or in terms of utilization of available resources, land that we are producing at an optimal level because of insecurity that has heightened within the last few months. So when you look at the combination of all these three factors, you will still see that prices of goods will still remain elevated if it's not taken care of. We shouldn't be moving goods by road from the north or otherwise from the north to the south. The rail system should be able to move it using cargo trains. To move it, it will be cheaper. And if the landing cost is cheaper, it means that the cost that would pay as consumers would also be less. So these are areas where government can focus. While the number one factor that can bring everything down drastically is insecurity. You know, like the president has said when he appointed the new minister for defense, that he wants to see farmers going back to their farm. If we begin to see that cultivation increase significantly, and with some of the enlightenment that we're seeing compared to the last 3-4 years, once people begin to see that some of these farm produce are available, we begin to see production, because we would see those that will off-takers that will be willing to take off this farm produce. You know, there are some are wary of even setting up production factories because they don't have the inputs, they don't have the feeds. So it would really help. That is that number one factor of insecurity. Secondly, we need to take care of our set up infrastructure that will help. Then if I will add this third one, to boost productivity, that's improve seedlings that would increase the yield per hectare that we would get. So once we are able to, and these are not very complex things to do, if we're able to achieve some of these things, we'll begin to see prices of goods, of food come down, we'll be self-sufficient. Then we begin to think of how do we want to export, how do we want to even add more value rather than even exporting the raw materials. We add more value here and we're able to export and begin to generate effects.
Now, let's look at electricity and, of course, energy costs generally. We see that as, well, just a recent decline again in the price of PMS. That might not reflect in the months that we are looking at. But looking at the energy cost and, of course, PMS and all of that impacting inflation, what do you also make around this space and what it means for inflation moving forward?
Okay, thanks. Energy is also a major factor that impacts the headline inflation. So if we look at the stability we have seen, after the movement to the new classification of Band A, Band B, we've not seen any major review since then. So we would say that prices of energy prices are remain almost at the same level. So on a month-on-month basis, if you look at it, it has declined or almost remain at the same level. And we look at the petrol prices, we're seeing a bit of stability. Yes, there was an increase at a point in time, but not as significant as what we used to experience. But it's also the availability. What we experienced before, even most people were buying at the non-official markets for them to be able to get to run their businesses, but now it's readily available. So that is also reducing the costs, energy costs that people put into business. But there will still be, this is a major input to production. Some in the manufacturing space constitute as high as 30%, 40% of their costs when you look at total production cost. So there's a need to begin to look at how can we make it more efficient. There's the study that's been carried that within the next 1-2 years, renewable energy may be cheaper, especially for maybe small businesses, than using the normal traditional energy sources. So how can we invest more in renewable energy, provide structures where people can get the equipment now and pay over time? How can we intensify that such that it reduces the input costs, which is energy costs, and that would impact on the total cost of production? So we need to begin on that, and we even reduce pressure on the grid, which we have not been able to increase in the past and for a long time. So that always has its impact. When you see, because when you look at energy costs, especially petroleum prices, impacts on transportation costs immediately. And transportation costs will impact on the cost of food because we move things by road. So we need to also be able to sustain and keep that very low. I think we are benefiting from the current stiff competition between the Dangote refinery and other major players within that space. We're still benefiting within the major issues that they are having, very stiff competition that they are having, so which benefits the masses, and that has also helped to keep inflation at a reasonable level.
As we move into the new year, the next monetary policy meeting, I think it should be in February, and many expect that there's likely to be a shift or something around that. Considering the present state of inflation at 14.45% and our NPR rate still at 27%, do you think that we might be seeing a shift, obviously, at the first meeting in 2026?
Yeah, so I will still be going for a shift, because even at before the last meeting, I was projecting there will be a cut in the NPR, because currently NPR at 27%. Even the main interest, when you look at interest rate on fixed income, at average it's increased slightly at 21% for the longer end of the curve. We saw the bond auction yesterday closing at 17%. So there's still a gap for us to continue to see NPR as very effective and very relevant. There's a need to close that gap. And with inflation, if we're able to sustain this low rate, we know from next year there may be a slight increase on the back of base effect before we begin to see maybe mild decline, but we don't expect to see any major decline to single digits next year, even if we continue at this pace, except something drastic happens, positive happens. So I think that next year we should expect that there should be a cut in inflation rate once the downward trend is sustained, and even if there's an increase, it's not significant before the next MPC meeting. Rather.
So generally, before I let you go now, issues around growth and projections for Nigeria's economy in 2026. Many analysts have come up to say it looks like it will be better than it is at the moment, considering the indicators that we are seeing and the outlook for 2026. So my question to you would be, what are your projections for Nigeria in 2026? We expect the implementation of the tax policies. We also expect looking at our pre-election year. So a lot of contending issues around that year 2026. But for the economy, what is your outlook?
Okay, thanks. I think that we will sustain this positive momentum, maybe a little bit shy around the north of 4%. But I think that when we look at some of the factors that typically cause major shocks to the system, firstly, FX. If we are able to sustain that stability, even if there's a depreciation and it's less than 5% that within next year, then maybe between 5 and 10, if it's not more than that, then we think that the economy will still continue in that growth trajectory. We are seeing the financial services, the banks have just raised money. We're seeing how technology is being used to push a lot of, to improve efficiency and push out product. So that will continue to open up. You look at the building sector, real estate sector continues to also expand, which will impact positively on the cement industry. Consumer goods demand is increasing because, as activities, we're coming from almost a negative region now to positive, and things are just consolidating at this level. So we think that would break out, can be positive if that momentum is sustained, and if we don't see any major shock around energy prices, around FX, and no major or global contagion impact that would reverse some of the gains that were built. So when you check the PMI data, you look at also the business managers index, they are very positive, very bullish that they feel that the economy will continue to grow in a positive direction in the next 6 months based on their projection. They are betting that they will hire more. These are some of the things that will boost confidence. So if we don't see any major reversal, insecurity is a major concern. And if that can also be taken care of or can be curtailed, rather, then we think that we should see a broad and inclusive growth in 2026.
Dr. Ayodeji, thank you so much for your time. Managing Director, Chief Business Officer, Optimus by AfriInvest. Do have a great day.
Always my pleasure.
Enjoy your Christmas and a Happy New Year in advance.
Merry Christmas and Happy New Year to you too. Thanks for having me.
Thank you so very much. Well, that's